Good morning, valued clients, family, and friends. The first thing I want to say to you is, let's go, let's get it today. Attack a Monday. No, in all seriousness, I started getting some calls last night from an advisory perspective, along with other stuff that's going on from a consultancy perspective overseas. And there's a lot to talk about. And I'm going to write within the next couple of days. I apologize. There's been a lot going on, and we're well positioned holistically for this turmoil. But what I want to say first and foremost is I was in Starbucks this morning, and it was a big pivot point for me. First of all, I usually, not from an environmental perspective because I could really care less, but I usually use a refill cup. And they couldn't fill it for good reasons because of the coronavirus. But the banter behind me was just, people, the bottom line is this with the coronavirus. People have no clue. President Trump has no clue. Okay, the people that President Trump has delegated responsibility have no clue. I can assure you. So until there's an assessment here, or until there's a more granular, clearer picture of the overall adverse effect that this is going to have on a fiscal perspective, and a monetary perspective globally, and on a corporate specific level, there's going to be a lot of uncertainty. Okay? What we can do, past precedent, there is no past precedent. SARS, we had a 15% retracement from peak to trough. Okay, this is not SARS. Okay, they don't understand this virus fully yet. They don't understand fully how it spreads. That's the reality and truth of the matter from what I understand from talking to doctors that are on the ground that are dealing with the CDC. Okay, so prepare for this for at least another couple months. That's the best guess from what I'm talking about before they have a granular perspective again on containment. There's a couple bigger dynamics at play here, okay? I've been saying for the better part of 3.5 months, from a baseline valuation perspective, stock markets were stretched, okay? Anytime you get over 18.5 forward earnings, those are multiples that are bubble metrics. Okay, so in essence, in the most perfect of time, when I say markets are priced for perfection, which you hear on Wall Street all the time when you get towards tops. So in the most idealistic utopian scenario, earnings would have had to grow 8% from the previous year to maintain the multiples that the stock market was trading at. This is healthy. This was needed to happen. Did it have to happen by popping a bottle of Corona? No, absolutely not. We don't wish this upon anybody. We want this to end. Okay, so this was necessary. Okay, we're having a shakeout. We're shaking out all those weaker holders that last leg up, the blow off top that people get in the market. Okay, now we're getting to the bone. Okay, we're probably 2/3 of the way there. I like to use, this is when I put technicals into play to find certain entry exit points. In this case, a point where we're going to start dipping our toes back into higher growth type stuff, which actually I'm looking to buy now. And I'll get into that when I write kind of what Keith and I are looking at. We use Fibonacci numbers, we use retracement levels. Is this the bottom? I'm not so sure because now we're in full-blown panic. We're going to get what they call capitulation today. This is people throwing in the towel. I give up. I'm out. Can't take it. You got to remember, we've been conditioned. We've been watching CNBC with our Wheaties for over a decade now. Okay, investors have been conditioned to buy the dip. It always worked. They're going to start going, CNC Music Factory, things that make you go, okay? That's going to happen today. Guaranteed. Europe's down over 6.5%. The U.S. is going to get lambasted. Whether openings are the low today, I had that feeling on Friday. I'm not so sure. We'll reassess. The other dynamic here with oil, you throw this in the mix. You talk about gas on the fire. And don't kid yourself, Putin knows exactly what he's doing right now. That guy is a serious, serious evil jerk. Okay? But anyways, I don't want to get into politics. I never do. It's a loser. We get out of high yield debt when we started to shift assets around about 3.5 months ago. I moved that into convertible bonds because of the embedded equity component that tends to act a little bit better in a volatile market like we're in. So I shifted half to there, half we went into the TLT, or the 20+ year US Treasury, which has obviously done very well. But with oil plunging another 20%, there's a very important element here. approximately 17% of all high yield debt or junk bonds are energy companies, which typically carry a very, very high debt burden on their balance sheet. Okay, so you're going to see junk, what they call junk bonds. If you own an ETF like the HYG, they're going to get slaughtered today. Okay, because the people that sponsor these funds have to sell the individual bonds to keep pace. So listen, breathe, right? The calls will start coming in. I got calls starting at 8, and I know I'm going to have advisory calls coming in left and right. Again, we're well positioned. Our younger investors, this is an opportunity, okay? This is an opportunity. We reallocate again today, okay? We throw money at this market again today. Longer term, you're going to be just fine. We always are. We'll figure this one out. I just, I did some meditation this morning. My song was Sowing the Seeds of Love by Tears for Fears. Went for my run, okay? Haven't even gotten a change yet. Gonna do some sparring tonight. Have a great day. Just breathe. We're gonna get through this. I love you all.